Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, we are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. Folks, I guess markets feeling slightly better because that climb down that kind of started 24 hours back with statements, that seems to be continuing out in the US.
I mean, the tone tenor all suggests de-escalation from the US's side.
Indeed.
Everything else we'll have to see.
Indeed, but don't count out a tweet coming in from Trump anytime soon. So let's see how that goes. But it's the expiry day. It's been a good series. So hopefully the bulls can push home the advantage. I think we're up 3.5% for the series itself.
Expiry days are tricky, Nigel, right?
Yeah.
Only, I guess, some say the only one guy matters on expiry day. The guy's not in India. Anyway, let's just quickly run you through, the big top-down stuff that you need to know as we begin, and lots of trade headlines, right? I mean, I was just joking with somebody that I'm getting up earlier and earlier, but I'm getting to office later and later.
Because there's way too many headlines and tweets and posts to go over.
Yeah, I mean, just the volume of, and it matters, right? Because what was said post-market hours, what was said during the session, some stuff has come through, it's been it's been clarified henceforth and so on and so forth. So let's take it from the top, right? US equities, recovery continued, S&P about 1.25% higher, Nasdaq about 2.5% up. So those are changes. And a large part of this is to do with headlines which came after US close the previous day, which is yesterday morning, our time, those headlines, right? I mean, there are two things. One is that Trump said he's not planning on firing Powell. And the second, of course, was the thing on China, that, we will perhaps, we will be looking forward to some kind of a deal with China. So conciliatory on both fronts, backing off on both fronts. So it came after US close. US futures were higher. So there was that lift in any case, which came through. Now, during the US session last night, you basically had the Wall Street Journal, which reported that Trump administration may slash steep tariffs on China to between 50 and 65%. Now, remember, Rahul Chadha, who's a veteran investor, we spoke with him same time yesterday, he kind of made the same point. He said, well, he wouldn't be surprised if the next 10 days, tariffs are dropped to from 145% to 40%, 50%. The Wall Street Journal story sort of made a similar pitch. But then after that, you had the Treasury Secretary, Scott Bessent, who clarified that there is no unilateral offer to cut China tariffs. It's not as if the US is going to say, well, it's not 145, it's 40, now let's start talking. It's not unilateral. We'll need to see something from the Chinese, and then we will decide to do what we can do. By the way, Scott Bessent, the Treasury Secretary, gave a speech, and it was widely watched, and we'll play some of it a little later here on the program. He said that looking at multiple factors like non-tariff barriers, government subsidies and tariffs with respect to China, and a full rebalancing of US-China trade might take 2 to 3 years. Now, he's saying rebalancing, not a deal. The deficit, basically, to rebalance it, of course, it will take that long, maybe even longer. But that, and of course, there was that one soundbite, I think, where he said, well, America first does not mean America alone. I think that also at the margin really helped sentiment. Now, US PMI numbers were solid. Services, there was a bit of a slide compared to the previous month, but I would say solid. Manufacturing PMI actually expanded. A surprise relative to consensus calls for a contraction. Now, I'll just come to, based off all this news flow, the price changes. The VIX was down about 6-7%. The 10-year lost about 2 basis points. So bond prices went up. Dollar index, has been hovering around the 100-odd levels. So 99.80 by the time US closed yesterday. Oil prices, which had gotten to about 68, we're back at about 66. So not very much by way of change. Now, after New York close, the FT reported, and I think there's some confirmation to it now, Trump is exempting car parts, auto parts, from tariffs on China imports. Various people and important people like Elon Musk have complained about this. And I think there is some amount of leeway which is happening. So not surprising. He's done similar things for Canada, Mexico as well. And of course, after New York close, last night's close, Trump also went on to say that we're not doing any business with China right now because the tariffs are so high. I'm hoping to make a deal. If not, we will set the price. That's essentially what he said. And he went on to add that those businesses and countries which don't reach out to the US, we will set the tariff in the next 2 to 3 weeks. So that was another one which came through. I'll just sort of leave you with the levels. Not very much change. I mean, many have been surprised. At least from yesterday, been a little surprised with the strength that we've been seeing, the continued non-stop strength. 7 days higher on the Nifty now. The levels, of course, upside level, 24,546 is where we are at. Support stands at the 40 hourly, which continues to be dragged higher, 23,865. The upside level is the 61.8% retracement of the full fall, as we've been pointing out. Bank Nifty saw a negative daily close yesterday. There is some loss of momentum, but there is no real change of trend or anything of that sort. Support, again, 40 hourly, which is 54,390. Resistance at yesterday's high, which is 56,098, and then 56,631. Gift Nifty will give you a first sense of how we're likely to start. We're down about 50 points. Surabhi.
Absolutely. Asian markets largely positive, tracking these developments off Wall Street. The fact that there is a quote-unquote de-escalation and he's not looking to fire Powell, and maybe in some shape, way or form, there will be a deal with China. It won't be as bad as 145%. And that's leading to some kind of, an uptick in markets like Japan. Actually, the Korean, the Hong Kong and the Shanghai markets, they're the ones that are not really feeling the love, so to speak, right now. Hang Seng is down. Shanghai is absolutely flat. But other regional markets, Japan, for instance, is up about 1%. Singapore is also tracking minor gains at this point in time. The story out of South Korea is not too great in terms of macros. Their first quarter numbers are in GDP numbers, and there's contraction there versus expectations of a 0.1% increase. The economy is contracted 0.1%. This is before the effect of tariffs kicks in. This is the first contraction that South Korea has showcased since, COVID 2020, so in the first in 4 years, so to speak. By the way, just pull up the price of gold, because I'm just seeing in Asian trade, this market, gold has started its winning form once again. Gold is up almost 2% in Asian trade this morning, levels of around 3360, so to speak. So keep an eye out in, because yesterday gold took a breather. It hit that high level of 3,500 in US trading. Then it cooled off, but that's what I'm talking about. 2% up again on gold. So that big move continues as well. Now let's talk about, of course, earnings. In South Korea, by the way, there was this, semiconductor major SK Hynix, big numbers there. 158% kind of jump in profits. So the semiconductor story is still strong. But speaking of earnings, that's exactly what we will track. That's the primary fulcrum of our market action today. Tata Consumers numbers better than expected. Revenues up 17%. The margin has fallen, but it hasn't fallen as badly as the market feared. So that's the good news. LTI Mindtree is in line. There's no major negative surprise in LTI Mindtree. The margin has held, so the market should take heart from that. Today is a very, very big earnings day. It's almost a breathless list. Axis Bank, lots of consumer names. HUL, Nestle coming through. Lots and lots of IT names. There's Tech Mahindra, Cyient, Persistent, Memphis, L&T Tech. Beyond IT, there are names like SBI Life, SBI Card, ACC. So, strap up. It's going to be a hectic session. On the fund flow picture, absolutely no problem whatsoever. Again, we got a big inflow yesterday. 3,300 crores of buying coming in from the FPIs. Domestic institutions on the sell side, they sold off cash equities worth about 1,200 crores. Now, but beyond all of the market headlines and tariffs, I am going to watch out for the geopolitical situation here in the country very, very carefully. Hectic developments since yesterday. Let's not look away from the kind of diplomatic strike India has done against Pakistan just yesterday itself with the abeyance of the Indus Water Treaty. The Atari post has been closed with immediate effect. All Pakistani nationals have been given 48 hours to leave the country. So it's very, very significant steps in terms of the geopolitical climate here. There is an all-party meeting, and we have to wait and watch for the next steps as well. So that obviously, in a larger context, will have a market bearing. Let's wait and watch on that perspective. Nigel, over to you.
Well, it's going to be expiry day that plays out yet again. It's going to be the second series that we're going to be going home with some gains. So on the Nifty, we're up close to 3.5%. The Nifty Bank has done even better with a gain of close to around 7% or thereabouts. Rollovers more or less in line with what we have seen on an average, both on the Nifty as well as on the Nifty Bank. Well, I think, the Nifty Bank, the one that's been an outperformer, will be the one that holds the key for the Nifty to trend higher from here on. And I say that because, in fact, it's finding some kind of resistance at higher levels. Last couple of trading sessions, it's gone to that 56,000 odd mark. And from there, it's seen a bit of a rejection. So that's why this level becomes very, very important for the Nifty as well, given that the Nifty Bank constitutes nearly 30% of its weightage. Crossing this 56,000 odd mark, that's the next key for the bulls to trend higher from here on. So I'll keep an eye out on that. Moving to what the FIs did, as you'll have been mentioning, they've been buying in the cash market. And yesterday, there was a bit of a short covering bounce that did play out as well, because they covered shorts on index futures. On stock futures as well, 52,000 contracts were covered out. That could be a bit of a reverse arbitrage that's taking place. Earlier, they were selling in cash and they were buying stock futures. Now that seems to be reversing a little bit. So that is, the reverse arbitrage that's taking place. So some kind of short covering is what we saw yesterday. But just take a look at that short covering bounce that we have seen. We started the series with the FIs being net short, not so large though. And initially they got it right because their short positions went up drastically by close to around 4 times. And we had the Nifty that came down by close to around 1,000 points. But after that, they have got stumped on the wrong side because you see the shorts, they have gradually been getting covered out. Now they're at around 70,000 short contracts, while you have the Nifty that's trend up a big rally, close to around 2,000 points is what we're seeing as that short covering bounce has taken place. So the FI shorts, they have got stumped on the wrong side. Given that today is the weekly expiry, the last 60 minutes, you'll get some volatility. And looking at the options data, we'll get a few hints out there. So in yesterday's trade as well, 24,350 call, 24,300 call, both of them were fairly active. So just punching in those levels and going by the premium out there, the important resistance mark for the day is around the 24,420. That's the important mark you'd like to see. And in fact, on the Nifty, you have the 200 DMA added on the 24,000 odd mark, which becomes an important support level. The one that I'm going to be tracking today, a couple of stocks because of the commentary that we had from President Trump with regard to some kind of exemptions on auto components. Well, I'll keep an eye out on both these two, Sambandana Motherson as well as Sona BLW, because both of them had got hit earlier. Let's see whether or not we're bracing for a bit of a relief rally on both these two.
Okay, all right, got that. So those are the key cues to watch as we go forward. Let's start off with then the equity call of the morning. And this one's coming in from Anubhav Agarwal of UBS, who says that they are positive on the Indian market for 4 reasons. They expect a consumption-led recovery in FY26 and FY27 after a weak consumption and capex cycle in FY25. He says lower oil prices and GDP growth and help in lower inflation. They also think that India looks better placed than its Asian peers to weather US tariff impact and a global growth slowdown, and valuations are reasonable with the market's 1-year forward PE multiple at past 7 to 8 year average. He says the top 6 buys in the country include HUL, ICICI Bank, Interglobe, Sun Pharma, Trent and TVS Motors. Their sell stocks are Asian Paints, Bajaj Finance, Cummins and Jubilant Foodworks.